Welcome back, Smash Property Podcast. This week's episode is all about the September property market update. We're going to go through what's happening nationally across the property market, deep dive into what is happening across each of the capital cities. And at the end, I'm going to go through some areas that I think I would be investing in based on specific budgets at $5, $6, and $800,000, plus a whole bunch more in today's episode. If you're new, my name's Nick. I'm the director of the Smash Property Investing Buyers Agency. And I've been in the property game and finance game for that matter too for better part of 20 years. I've built my own property portfolio, now helping other investors do the same. Um, Before we get into it, none of this is financial advice. I've got to say, don't just base your investment decisions on what you see in this podcast or any other podcast for that matter. Use the information for sure, but go ahead and do your own research in the background. You don't want to buy anything just based on what you see online. This is designed to help people maybe narrow down some specific areas from what we're seeing on the buyer's agency front. So let's get straight into it. And we're going to look what is happening across the Australian market. And for the month of August, the property market did move as a collective at the median level by 0.7%. Now that is a number, obviously, but that's several $1,000s in increased value across the median level across the country. Now, Brisbane, surprisingly, well, not surprisingly for me, is leading the charge. Perth and Darwin not too far behind that. And we'll go into specifics about those capital cities in just a minute. Melbourne, for the second month in the row, has slowly ticked back up. So this is strongly suggesting for me Melbourne has officially entered recovery mode. When we're looking at the rental markets, it is brutally tight across the Australian property market. We've got a lot of areas with less than a 1% vacancy, which is extremely low. In fact, some of the lowest we've seen in many decades. And at the same time, we've got new building approvals sitting 30% below average as well. So that's just combining a massive, massive undersupply in the market. And that rental squeeze isn't going away anytime soon. So what that means for investors is obviously, you're gonna get your property. It's going to get tenanted out reasonably quickly, and that rent is going to slowly increase over time when you are buying in the right market. So good signs for investors. Obviously, not a great outcome for tenants. That is obviously a separate topic. Looking at the economics behind what is driving the property market at the moment, I do like to pay attention to what is happening on the interest rate side and what the RBA are doing. They've obviously paused hikes for some time now. Borrowing capacity, though, is still down around 30% to where it was once 2 years ago, based on where the rate is currently at. People can borrow 30% less. Buyers are working with smaller budgets, and we are seeing this on the buyer's agency side, right? There are a lot of people, majority of people, sort of sitting in that sort of $500,000 to $700,000 range when it relates to them going to buy an investment property. And that does explain, I've seen a bit of a rush to people getting into townhouses and units, which is a very interesting equation when it comes down to it. Looking further down the line, the cash rate futures did have an aggressive, expectation that rates will come back down towards the latter part of this year. That's sort of stabilized a bit. It's not expecting massive cuts continuing to go. I think there are maybe one or two more cuts priced in towards the end of the year, if not early into next year. So we may see rates come further back down, and that will then allow people a bigger borrowing capacity, allow more people into the market. And then, like I mentioned on many other podcasts, you've got more people in the market. What's that going to do? It's going to push up prices even further in select markets. When we look at inflation, inflation has eased, hence the rate cuts that we are seeing, but still remaining household budgets are still pretty tight, right? Like rates are a lot higher than what they once were a couple of years ago. Inflation has eaten away at the cost of living. And that's pushing more people into affordable suburbs and affordable renters, which is keeping pressure on those markets. And I've said many times before, I like to buy from an investment perspective at that lower end of a market. So if I'm looking at a Brisbane, I'm looking at sort of 600 to 700K range when we're looking at houses, although you're not getting much under 700 anymore. If you've got sort of 500 to 600K, we're looking at regional markets. And again, we're not buying at the higher end of the regional market. We're buying at where people can afford, and we're buying where the rental demand is strong. Migration, one of the other key factors we need to pay attention to when it relates to property investing. Queensland continues to attract the lion's share of interstate movers. I, for myself, am coming to you from a new podcast studio. We've just moved up to Queensland, so I can attest that there are a lot of people moving here from places like Melbourne, Sydney, and all that sort of thing. International migration is back in full swing, and that is adding fuel largely to the rental market first. A lot of people migrate to the country. They tend to find rental properties first, and then several years later, they then move into buying properties for themselves. Infrastructure, one that is an interesting one for me. Now, Queensland again is kind of taking the limelight as it relates to infrastructure investment, particularly as we head into the 2032 Olympic Games in Southeast Queensland. There are billions of dollars flowing into that particular part of the world, which is great to see. And that is obviously adding more jobs. It's adding more demand for housing. And then that long-term demand that we sort of get post-Olympics is something that I'm very interested to see how it plays out. Obviously, Sydney 2000 Olympics did have a great effect on the Sydney property market post-Olympics. However, it was a different time and space. There are other capital cities across the world that have had Olympic Games, and it's not seen that same property growth. So, all things considered, I think Brisbane itself is going to be a big beneficiary of the Olympic Games, or more so the post-Olympic Games growth. Just considering the overall Australian property market as a whole, the livability of the Brisbane city and the surrounding Southeast Queensland area, I think it is a great market to be in for that sort of next 10-year period. I think we're going to see some amazing growth there. Victoria also has got major upgrades infrastructure-wise through Geelong, Bendigo, and Shepparton as well. And again, these are just creating jobs in these areas, and that is just putting a further pressure on housing demand in those particular areas. So let's take a look now at the capital city performance. I love this one. And we can see Brisbane. Brisbane is up 1.2%, which when you put it in dollar terms, it's up just over $11,000 in 1 month. So if you had been holding and waiting and sitting on the fence, you've just cost yourself $11,000. And this is obviously at the median level. Annually, Brisbane is up almost 8%. And the median value was just sitting under $950,000. Brisbane, I'm a big advocate for. I love the market. I've personally got many properties there and have bought for clients as well. I continue to say, whilst it's had a massive run in the lead up and through COVID, like many other markets have, I will put my hand up and say that I can see it continuing to do very well, at least over the next few years. Perth, always one that I've had a funny relationship with. Perth is up 1.1% on the month, which is massive. In dollar terms, it's up just over $9,000 annually, up 6.6%. And the median value in Perth sitting at $841,000. I've got a funny relationship with Perth. I often shit on it and say, no, it's done. The Perth market, it peaks and it plateaus for 10, 15 years. And then it keeps coming back and biting me with the growth that we're seeing there. So a very interesting one. We'll get into what my thoughts are on specific areas in Perth potentially later in this episode. Darwin's been charging for some months now. And it is up month on month 1%, which is just about $5,500 in increased value. Annually, it's up 10%. Now, obviously, the starting position for Darwin at the median level was pretty low. Currently, the median values are sitting at just over $550,000, but super interesting. I know a lot of investors are rushing into Darwin because of the yield that you can get there. I'm personally not buying in Darwin, nor am I buying there for clients. I just don't see things stacking up for sustainable long-term growth in terms of capital growth in the Darwin market at this point in time. However, it's not to say don't do it. I'm just not doing it, and I'm not doing it for clients. But I know there are plenty of buyers agents buying in Darwin. So you've just got to pick the pocket, know the reason why you're going to do it. It's largely going to be a cash flow play. Or if you're going to do it and you want to speculate and kind of get a little bit of growth in the short term, maybe sell off afterwards. Bit of a higher risk there, but just do your research before you jump into that market. Adelaide is up 0.9%. which is $7,600 in the month. Annually is up 6.5%. Now, if you've been watching and following on this podcast, you'll see that the annual rates for Perth and Adelaide have come down significantly. These were sitting 8, if not closer to 9% a couple of months ago. Obviously, a sign of the market cooling there. And at Brisbane slightly as well, but as you can see in the month, it's sort of had a little bit of a surge as well. Sydney up 0.8%, which is $9,700 in the month. Annually up 2.1%. I will need to verify if that is correct from the team there, but we've got the median value sitting at 1.2 million, which is just ludicrous, right, for Sydney. I've just moved out of Sydney to find a house in that place. Yeah, under 1.2 million, you're asking a lot there. Canberra up 0.4%. Melbourne 0.3%. Now, this is obviously all in order of growth on the month. Melbourne is sitting right at the bottom of the list there. So there's a lot of people, I know, waiting. Is Melbourne the right time to do it? It's go time in Melbourne. I said it last month. If you want Melbourne, it's go time. My personal view on Melbourne is that it will definitely do well. However, I don't see it being a, doubling, growth in the next few short years. There are a lot of factors with Melbourne I just don't love. There are large pockets of Melbourne that are very oversupplied. Lots of new builds, lots of new building approvals in a lot of the outer ring suburbs. That stamp duty is often double what you would normally pay, for example, in a Queensland. Land tax, people often overlook what the land tax is going to cost you. The saving grace, though, the net yields in Melbourne can be very comparable to what you can expect in something like a Brisbane. So all things considered, not a terrible market. I'm not saying don't do it. I do have property in Melbourne. I actually was buying in Melbourne a year ago, maybe 18 months ago, personally. So yeah, I've got some skin in the game there, but I'm not rushing in there for clients at the moment. Hobart actually went backwards slightly, 0.2% backwards. Which is very interesting for the Tasmanian market as a whole. So that's what's happening across the capital cities. Obviously, Brisbane, Perth, the standout performers for me. A lot of people, including a lot of buyers agents out there, said that don't buy in Brisbane, don't buy in Perth. What are you doing? It's silly. Well, yeah, look at the numbers. Let the numbers do the talking. And that's all we like to do here. So let's now take a look at where to focus based on specific budgets. Now, the first one we're going to tackle is budgets up to $500,000 and where I would be buying based on that particular budget for myself personally. And an area that's shown up a lot in my content and shown up a lot in a lot of other content, Rockhampton. I've been buying in Rockhampton for a long time. I am continuing to buy there in specific markets at specific prices, or I should say specific suburbs. It is, in my opinion, a stable market. It's not got that, double from $200,000 to $400,000 price range anymore. But I do see it being a steady, long-term performer as it relates to the growth of properties. Now, at the moment, you can still get reasonably good properties under $500,000 in the Rockhampton City Council area. Yields are sitting around the 5%. They are starting to deteriorate, though. As prices rise, yields will deteriorate because rents don't catch up as quickly as prices grow. There are affordable houses in inner suburbs. Rental yields are pretty good. Vacancy rates are very low, often less than 1%. Insurance checks here, though, are critical. Checking flood zones are critical. Also, checking bushfire overlays are absolutely essential. There are parts of Rockhampton that look great on paper, but they flood, and we do not want to buy in a flood-prone area whatsoever. Even if you can get insurance, it's generally going to put your cash flow to a position where it just doesn't make sense to buy into that market. So please do the research and make sure you're buying in or outside, I should say, of those flood-prone areas. All right, next on my list. Yeah, I love this place, Shepparton. Shepparton in Victoria. I actually went to school in Shepparton, so I know the area well. I love the area. So yeah, you could definitely get properties in Shepparton for under $500,000. My opinion, it is in a growth phase. It is that growth phase of the cycle. It is quite affordable entry point. It's not too far from Melbourne. It's sort of got a bit of a renewable kind of energy focus. There's a few transport projects going on in and around that Shepparton area, but definitely one to be looking at. It is a great part of the world. I got to say, I'm maybe a bit biased because I actually used to live in Benalla, which is about an hour away from Shepparton, but I went to school in Shep every day. Or obviously, you go to school every day. I hope. Some days I didn't go, but anyway, that's another story. Shepparton definitely one to watch. Now the third market that I love is the Southeast Queensland market as a whole. Now, this is you might be going, well, how can you buy in Southeast Queensland for under $500,000? Well, you can't if you want to buy a house. Those days are long gone. But this is where, if you want to get into a capital city and you want to spend, in and around that $500,000 mark, potentially townhouses and units are things that I would be looking at. There aren't too many in Brisbane anymore, but that Southeast Queensland sector does have properties available in that sort of price range. This is sort of like a tactical metro entry when houses aren't really feasible for you as the property investor. My opinion, like I said in the intro there, the Brisbane market or the Southeast Queensland sector as a whole, I feel is going to have a massive amount of growth leading up to the Olympics and potentially post-Olympics as well. So yeah, if you want to get into a capital city and you want to spend under 500K, definitely look at that Southeast Queensland market. Where to focus for under $600,000. Now, I've put here regions. Now, I put regions because there were actually quite a few different areas that I liked, and I just couldn't fit them all here. So we'll kind of go through high level what they are, but starting with regional Victoria. If you've got a budget under $600,000, regional Victoria is a good market for long-term sustainable growth. Yields are sitting in that sort of 4 to 5% sort of range, depending on the price point and the area that you buy. So Bendigo, Ballarat, Geelong, all areas that I really like, particularly the outer suburbs of Geelong. They are still affordable. There has been a bit of noise, and I know there were a lot of BAs buying in these particular markets, and rightfully so. So we got to pick the asset wisely. So I would always go, you want a high, you want something that is built really well. It doesn't have to look great, because as the investor, that's where you can make the money rather than buying something that's fully renovated and fully done. Someone else is making the money off that and you're the chump buying it off them, right? So find something with good bones. You'll often hear the worst house in the best street. Just stick with that sort of mindset, and you can definitely find something that is good value in these areas, and then gives you an opportunity to manufacture your own growth, so you're not just reliant on the market doing its thing. These particular areas are backed by some reasonably good infrastructure projects. There are very strong rental demands in these areas, and with that, you get very tight vacancy rates. Now, a lot of these markets, Bendigo, Ballarat, Geelong, and even Shep to a degree, very close to Melbourne, right? Like you're talking a couple of hours drive at most, and you do get sort of that ripple effect of Melbourne doing its thing. People that want that regional lifestyle but might work in the city a couple of days a week do look to these kind of markets to live for lifestyle reasons. Now, the second area, or the second region, regional Queensland. Now, I'm a big advocate for regional Queensland. You can find some amazing deals for under $600,000 still to this day. It is still in a growth phase of the cycle. This is probably more, a balanced sort of growth and yield play, again, depending on the market that you're going into. So I've been a big Bundaberg fan for a long time. Bundaberg, it's very difficult to find something that's something that you'd want to sink your teeth into for under $600,000. We are still managing to do it for our clients here and there. However, that comes with having the right relationships with the agents to get the deals. But if you're just looking online, it might be a little bit tough to do. So have a look at areas like Maryborough on the Fraser Coast, Mackay, and the surrounding areas of Mackay, not just the city, but the LGA itself, do have affordable houses. Again, with Queensland, you've got to be careful, and you've got to do your due diligence on the area. Make sure it's not in a flood zone, not in a bushfire hazard area, and all the other checks that you do as well. These areas have very, very low vacancy rates. And again, that's great for investors. Means you can rent the property out pretty quick. You can command a decent fair market rate for the rent that you get for the property. The third area on the list is Perth outer region. So suburbs, I'm going to butcher this. Perth, I don't know what is up with your suburbs. Kun, Kungamia. 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 I don't know, man. Whatever. Like Perth, under $600,000, you can get something pretty decent, and the yields there are still pretty good. Sort of in that 4.5 to 5.5% range. As we've just seen, Perth is only second to Brisbane in terms of growth, and you can still get something there on the outer rings of Perth for under $600,000. There's still a good population growth happening in Perth. And again, I keep saying it, but very strong rental demands. And with that, you get very strong yields as well. Coongamia. Coongamia. I think that's it. If I've got it wrong, just hit me up in the comments and just let me know what it's supposed to be pronounced or how it's supposed to be pronounced. Where to focus based on an $800,000 budget. And number one, guess what it is? It's Brisbane, obviously, right? You can get something in Brisbane for under $800,000. It's going to be a decent, solidly built home. And I would be focusing on places like the Moreton Bay LGA, Ipswich LGA, Logan potentially, or Logan's had a lot of growth, but there's still some good value in there from time to time. It's got a huge amount of strong migration. Just avoid the lifestyle driven markets, right? You want the owner occupied areas. You want people living and working in the area. So that's why I say the Moreton Bay, Ipswich, and certain parts of Logan for under $800,000. Just keep in mind the yields in Brisbane have deteriorated a lot over the last maybe sort of 18 months, 2 years. Obviously, the prices have risen a lot in certain pockets. Rents haven't quite caught up yet. So the yields were great in Brisbane. They aren't what they once were, or something like. You get what I'm saying. All right, second on the list, Adelaide. Adelaide, you can definitely get something for under $800,000 in Adelaide. It's a pretty stable market. I don't see Adelaide, keeping up with the Brisbane at the moment. There's nothing really happening there that's sort of indicating to me that it's going to be a great, market performing in the short term. Definitely, long-term hold, 20, 10, 15, 20 years, it will do well. But short term, I'm not really too convinced about it. But there's still some good value in that particular market. Melbourne, you can get something for under $800,000. It's obviously in recovery mode. Focus on the northern corridor, the Bayside or the outer east. Avoid oversupplied areas like the Trigonina and Tarneet and all that sort of stuff on the western side. Yeah, I don't know, man. I'm not like everyone's all banging on about Melbourne, and it's gonna grow. It will, but I'm just not convinced it's gonna just blow up. Like Brisbane blew up, Perth blew up, Melbourne. I don't know. I just don't like the land tax thing. It just that's the state itself. Just kind of like I don't know. I just don't trust it, to be honest with you. That's just my view. But hey, I'm just a dude talking to a microphone. Perth, again, you can find something for well under $800,000. And relative to the East Coast, the type of asset that you can get in Perth, you're going to be paying probably close to double what you would get pay on the East Coast for it. So I would be looking at those particular areas. So Brisbane, Adelaide, Melbourne, and Perth for budgets under $800,000. So that is, my take on the Australian property market update for September. Now, the numbers obviously do the talking here. Brisbane and Perth, they're doing really well. Melbourne showing signs of some life there. Not really doing anything amazing just yet. I'm not going all in on Melbourne just yet. This just comes back to every single month I talk to investors, and investors that have worked with other BAs. A lot of buyers agents throw people into different postcodes. They'll churn through, 300, 400, 500 clients a year, and they'll throw them into different postcodes, often overinflate the actual market value of those particular areas They'll then get their investors to sell the properties. That market then dips. So just be careful when you're watching buyers agents on particular podcasts promoting certain areas. They often buy in those areas first. They'll get their clients in there, then they'll jump on a podcast to promote the areas. That obviously gets interest from a lot of the general public who start to buy in that areas. That pushes the price up further. They get their investors to exit. There's a whole thing going on here. That's not what we do. I buy where the numbers make sense. I buy good deals for investors in markets that stack up with the right fundamentals. All right. So the way that I look at it, if you've got $800,000, you can get yourself into a capital city market and you're going to do very handsomely over the short to medium term. The 600K range, that's about buying in regional hubs. All right. Buying houses in capital cities for 600 grand anymore just doesn't really exist. If you've got $500,000, it is starting to get a very tough price point buying at $500,000. There are, like I mentioned, the markets that you might want to be looking at. And you can try to get into some capital city markets, but you're looking at townhouses and units at that particular budget. So my advice to the investors that watch this is doing market research is really important, but train yourself to be able to spot value in properties regardless of what market it is in. Because if you can do that, if you can identify value in any market, you as the investor are going to reap the reward of that. So don't just chase a market because it's expected to grow. Look at a property and go, how can I manufacture my own growth out of this so I don't have to wait for the market to do its thing? That's what I'm doing for myself. I'm doing for investors as well. And I think it is what we are fundamentally missing as property investors. We tend to just chase all of these things. Where's the next market? Where's the next market? Which is important. Don't get me wrong. But spotting value, in my opinion, is more important than chasing a hot market. I hope you got some value out of that episode. If you did, appreciate it. If you could like the video, consider subscribing if you haven't already. Next week, we're going to bring to you yet another podcast. I actually don't know what the topic is going to be, but it's been a pleasure filming this one in our brand new studio here in the Sunshine Coast in Queensland, a beautiful part of the world. My name's Nick V, director of the Smash Property Buyers Agency. If you want to help on your property journey, and you want some help building a plan, finding the right market, finding the right deals, helping you negotiate all the way through to helping you find a tenant and spotting some value add potential for the property. That's what we do. That's what we specialize in. Investment properties only. We don't do any owner occupied properties. But if you need help, the link is in the description below. You can book a call. Doesn't cost you a cent. If we can't help you, we're going to say so. We're not going to take you on as a client if we know we can't help you. But it's always good to have a chat. Again, doesn't cost you a cent. Thank you so much for watching. Until next time, catch you soon.